Understanding Central Bank Digital Currencies, CBDCs, Risks and Solutions. It's no secret that central bank digital currencies, CBDCs, are becoming a reality, and there's a growing buzz surrounding their implementation. You may already be aware that CBDCs cannot be exchanged privately. The government, along with its partners, will have full access to every transaction, tracking where, when, and what you purchase. Furthermore, CBDCs can be programmed to limit what you can buy, meaning that a cashier could simply inform you that your digital currency won't cover certain purchases. You're likely also aware that CBDCs may be given an expiration date, which means they can expire on a predetermined date. This mechanism could be used for economic stimulation or to increase tax revenue, forcing you to spend your money quickly on items you don't need, thus preventing you from saving and building wealth. Additionally, there is the possibility that the government could eliminate cash altogether, leaving CBDCs as the sole medium for financial transactions. But do you know what you can do to protect your financial privacy, safety, and control? Here are some practical steps. Take control of your transactions. Imagine you're shopping at a supermarket and wish to avoid using CBDC for payment. Instead of simply accepting the digital currency, approach the store manager and ask, "I would prefer not to use CBDC today. What method of payment can you offer that ensures my transaction remains private, secure, and under my control?" Listen carefully to the response. If the store manager cannot offer a secure and private alternative, politely inform them that you will not be making any purchases there until they offer a secure, private payment option. If enough consumers demand privacy and freedom from surveillance, businesses will be forced to adapt. It's essential to send a clear message that customers prefer privacy and will take their business elsewhere if CBDC is the only payment option available. Using private payment methods. As consumers, we should demand the ability to use private currencies in exchange for goods and services. Supermarkets, utility companies, insurance providers, mortgage lenders, and even tax collectors need to offer secure alternatives to CBDC. One option businesses may offer is a rewards card, an alternative form of currency that bypasses the surveillance system. Gold and silver are also perfectly legitimate, private currencies. Consider using silver coins or other secure private currencies for transactions. If the seller refuses to accept such alternatives, you should be ready to walk away from the transaction, making it clear that you will not engage with any business that enforces CBDC usage or fails to respect your privacy. Legal and ethical considerations. It's important to remember that there are no legal restrictions on using alternative currencies like silver or even bartering for goods and services. If the government tries to pass laws prohibiting such harmless behaviors, such as using personal, private currencies, those laws would be unconstitutional and unenforceable. In fact, by attempting to mandate the use of CBDC, governments may inadvertently encourage the widespread use of private currencies to evade the surveillance and control mechanisms they wish to impose. While CBDC and other digital currencies can be tracked, controlled, and manipulated, traditional physical currencies like gold, silver, and other assets remain free from such interference. Thus, it is crucial to explore and use private payment methods before CBDC is fully implemented. The risks of digital currency. It is essential to understand the broader implications of using CBDC. Just as smartphones and other digital devices can track and monitor our every move, so too can digital currencies monitor and control our purchases. However, as more people embrace alternative methods of payment and demand privacy, businesses will have no choice but to adapt. In the event of CBDC rollout, consumers must actively search for alternatives to ensure they do not fall into the trap of centralized, controlled financial systems. Otherwise, they risk being manipulated and surveilled with little recourse. Conclusion. The key to maintaining financial independence in the era of CBDC is to refuse to accept systems that compromise our privacy and autonomy. By demanding alternatives, using private currencies, and understanding the implications of digital currency surveillance, we can reclaim control over our financial transactions. As always, it is crucial to stay informed, be creative, and be brave in the face of these challenges. Choosing to use private, secure methods of payment isn't unreasonable, it's essential for protecting our privacy, financial freedom, and dignity.